Question 1. Topic: Policy provisions and options. Which of the following accurately describes a non-cancelable disability insurance policy? A. The insurer cannot cancel the policy, but they can increase the premium based on the insured's age. B. The insurer cannot cancel the policy or increase the premium as long as the premiums are paid on time. C. The insurer may cancel the policy after a specified period but cannot adjust premiums for the insured. D. The insurer cannot cancel the policy but may modify the terms of coverage at renewal. Answer: B. Explanation. A non-cancelable policy guarantees that the insurer cannot cancel the policy or increase premiums as long as the insured pays the required premiums on time. This ensures the insured maintains predictable costs over the life of the policy. Option is incorrect because premium increases are not allowed in a non-cancelable policy. Option C is incorrect because non-cancelable policies do not allow cancellation after any period. Option D is incorrect as terms of coverage cannot be modified in a non-cancelable policy. Reference: North Carolina specific disability insurance laws uphold the guarantees provided in non-cancelable policies under standardized provisions. Question 2. Scenario-based. Topic: Claims and benefits. Scenario: Sarah, a freelance graphic designer, has an individual long-term disability insurance policy. She suffers an injury that prevents her from working in her occupation. Her policy specifies an own occupation clause. After receiving benefits for 6 months, her insurer informs her that the policy will transition to an any occupation clause after 24 months. What does this change mean for Sarah's benefits eligibility? A. Sarah will no longer receive benefits unless she is unable to perform any occupation for which she is reasonably suited by education, training, or experience. B. Sarah will continue receiving benefits as long as she cannot perform her specific job as a graphic designer. C. Sarah's policy will terminate immediately after the transition period and she will no longer receive benefits. D. Sarah can only continue receiving benefits if she is unable to perform manual labor occupations, regardless of her qualifications. Answer A. Explanation. Own occupation coverage means benefits are paid if the insured cannot perform their specific job. After the 24-month transition, the policy changes to an any occupation clause, which requires Sarah to be unable to perform any job for which she is reasonably qualified. Option B is incorrect because benefits under an any occupation clause require broader incapacity than the own occupation standard. Option C is incorrect as the policy does not terminate but modifies its eligibility requirements. Option D is incorrect because it misinterprets the meaning of an any occupation clause, which considers reasonable qualifications, not just manual labor. Reference: North Carolina policy provisions allow such transitions, and understanding these clauses is critical for interpreting benefit eligibility. Question 3. Topic: Social Security Disability Insurance (SSDI) and Supplemental Security Income (SSI). Which of the following is a key difference between SSDI benefits and private disability insurance? A. SSDI requires proof of substantial gainful activity, while private disability policies do not. B. SSDI benefits are generally higher than private disability insurance payouts. C. SSDI eligibility is based on work history and Social Security credits, while private disability insurance is based on purchased coverage. D. SSDI covers partial disabilities, while private disability insurance only covers total disabilities. Answer: C. Explanation. SSDI eligibility is tied to the insured's work history and accumulated Social Security credits. Private disability insurance, on the other hand, is based on the terms of a policy purchased by the individual or provided by an employer. Option A is incorrect because SSDI eligibility actually requires proof of inability to perform substantial gainful activity, not proof of it. Option B is incorrect because SSDI benefits are often less than private disability payouts due to strict calculation formulas. Option D is incorrect because SSDI generally does not cover partial disabilities, while private policies often include coverage for residual or partial disabilities. Reference: Federal SSDI regulations versus provisions in North Carolina private disability policies highlight these differences. Question 4. Topic: General insurance principles. Which of the following best describes the principle of indemnity in disability insurance? A. Ensuring that the policyholder receives an amount greater than their loss to account for inflation. B. Guaranteeing that the insured is restored to their financial position prior to the loss without gaining a profit. C. allowing the insurer to recover paid benefits from the at-fault party. D. Providing fixed benefits regardless of the actual loss incurred by the policyholder. Answer B. Explanation. The principle of indemnity ensures that the policyholder does not profit from their insurance claim but is restored to their prior financial state. Option is incorrect because indemnity does not account for inflation unless specifically included in a policy. Option C refers to subrogation, the different insurance principle. Option D is incorrect as fixed benefits are not a component of indemnity. They are typical of pre-agreed policies like supplemental plans. Reference North Carolina regulations emphasize indemnity in preventing overcompensation to policyholders. Question 5. Scenario-based topic. Claims and benefits scenario. James, a factory worker, purchased a short-term disability policy with a 14-day elimination period and a benefit period of 6 months. He suffers an injury on June 1, rendering him unable to work. On June 10, his doctor certifies his disability and submits all required documentation to the insurer. When should James expect his first benefit payment, assuming his claim is approved? A. June 10, B. June 14, C. June 15, D. June 30. Answer C. Explanation. The elimination period is the time the policyholder must wait after the onset of disability before benefits begin. James's elimination period ends on June 14, so benefits start on June 15. Option A is incorrect because the elimination period is not met by June 10. Option B is incorrect because benefits start the day after the elimination period, not on its final day. Option D is incorrect because it exceeds the elimination period without justification. Reference Short-term disability policy terms and North Carolina claims processing standards regulate these timelines. Question 6. Topic. Group disability insurance. Which of the following is a key characteristic of employer-sponsored group disability insurance plans? A. Benefits are always taxable to the employee. B. Coverage is typically guaranteed issue, requiring no medical underwriting. C. Employees can convert the group policy to an individual policy at any time. D. Group plans always offer longer benefit periods than individual plans. Answer B. Explanation. Group disability plans are often guaranteed issue, meaning employees do not need to undergo medical underwriting. Option A is incorrect because the taxability of benefits depends on whether premiums were paid with pre-tax or after-tax dollars. Option C is incorrect because conversion is typically limited to specific situations like employment termination. Option D is incorrect as benefit periods vary and are not inherently longer in group plans. Reference North Carolina laws on employer-sponsored insurance and underwriting exemptions. Question 7. Topic. Individual disability insurance. Which of the following is not typically a feature of individual disability insurance policies? A. Customizable policy options, including riders. B. Guaranteed renewability with premium adjustments allowed only by class. C. Group discounts based on employment affiliation. D. Portability, allowing policy continuation regardless of employment changes. Answer C. Explanation. Individual disability insurance policies do not generally offer group discounts, which are characteristic of group plans. Option is incorrect because individual policies often provide customizable options. Option B is incorrect as guaranteed renewability is a standard feature. Option D is incorrect because portability is a key advantage of individual policies. Reference Individual policy structures in North Carolina disability insurance markets. Question 8. Topic. Social Security Disability Insurance (SSDI) and Supplemental Security Income (SSI). Which of the following accurately reflects SSDI eligibility requirements? A. The applicant must have a documented disability expected to last at least 6 months. B. The applicant must be unable to perform substantial gainful activity due to medically determinable impairment. C. The applicant must have no other sources of income to qualify. D. The applicant must only meet medical criteria regardless of work history. Answer B. Explanation. SSDI requires the applicant to have a medically determinable impairment that prevents substantial gainful activity. SGA option A is incorrect because the impairment must last at least 12 months or result in death. Option C is incorrect because income limits apply only to SGA, not all sources of income. Option D is incorrect because SSDI eligibility is based on both medical criteria and sufficient work credits. Reference Social Security Act standards for disability and North Carolina coordination rules. Question 9. Topic. consumer needs and policy suitability. Which factor is most critical in determining the appropriate disability insurance policy for a self-employed individual? A. The insurer's financial rating. B. The elimination period that matches savings to cover lost income. C. The availability of group discounts. D. The total number of riders offered. Answer. B. Explanation. A self-employed individual must consider their ability to cover lost income during the elimination period as they lack employer-provided benefits. Option A is incorrect because while insurer ratings are important, they are not the most critical factor. Option C is incorrect because self-employed individuals typically cannot access group discounts. Option D is incorrect because the quantity of riders is less relevant than the core policy terms. Reference: North Carolina Guidelines on Policy Suitability for Various Occupations. Question 10. Topic: Legal and financial considerations in North Carolina. How are disability insurance benefits taxed when the premiums are paid entirely by the employer? A. Benefits are fully taxable as income to the employee. B. Benefits are tax-free to the employee. C. Benefits are partially taxable based on the employee's tax bracket. D. Benefits are subject to Social Security and Medicare taxes only. Answer. Explanation. When the employer pays the full premium for disability insurance, the benefits received by the employee are taxable as income. Option B is incorrect because tax-free benefits apply only if the employee paid premiums with after-tax dollars. Option C is incorrect because the taxability is not based on the tax bracket but on the premium payment structure. Option D is incorrect because the benefits are subject to income tax, not payroll taxes like Social Security or Medicare. Reference: North Carolina tax treatment of employer-sponsored disability insurance. Question 11. Topic: Policy riders. Which of the following policy riders is most likely to increase the monthly benefit of a disability insurance policy over time to account for inflation? A. Own occupation rider. B. Future increase option rider. C. Cost of living adjustment COLA rider. D. Residual disability rider. Answer. C. Explanation. The COLA rider increases benefits to keep pace with inflation, ensuring the purchasing power of the benefit is maintained. Option A is incorrect because the own occupation rider modifies the definition of disability but does not adjust benefits. Option B allows future increases but requires the policyholder to opt in. Option D covers partial disabilities but does not adjust for inflation. Question 12. Topic: Claims denial and appeals. Which of the following is the first step a policyholder should take if their disability insurance claim is denied? A. File a lawsuit against the insurer. B. Request a detailed explanation of the denial from the insurer. C. Appeal directly to the state's insurance commissioner. D. Cancel the policy and seek coverage from another insurer. Answer. B. Explanation. A detailed explanation helps the policyholder understand the reasons for denial and prepares them for an appeal. Options A and C are premature before understanding the denial. Option D is impractical as the existing claim cannot be transferred to a new insurer. Question 13. Topic: Short-term versus long-term disability. What is a key difference between short-term and long-term disability insurance policies? A. Short-term disability policies require medical underwriting, while long-term policies do not. B. Long-term disability policies typically offer higher benefit limits than short-term policies. C. Short-term disability benefits are always tax-free, while long-term benefits are taxable. D. Long-term disability policies do not include elimination periods, while short-term policies do. Answer. B. Explanation. Long-term disability policies often provide higher benefit limits due to their extended benefit periods. Option A is incorrect because underwriting requirements depend on the specific insurer and policy. Option C is incorrect because the tax treatment depends on premium payment structure. Option D is incorrect because both types include elimination periods. Question 14. Scenario-based. Topic: Coordination of benefits scenario. Sarah has a group disability policy through her employer and an individual policy she purchased independently. She becomes disabled and is eligible for benefits under both policies. What will most likely happen regarding her benefit payments? A. Both policies will pay their full benefit amounts. B. The group policy will pay first and the individual policy will only pay the remaining unmet amount. C. The individual policy will pay first, reducing the group policy benefit. D. The benefits from both policies will be coordinated to prevent exceeding her actual income. Answer A. Explanation. individual than group disability policies are independent and typically do not offset each other unless specifically stated in the policy terms. Question 15. Topic. Definition of disability. Which of the following is typically considered the most favorable definition of disability for a policyholder? A. Own occupation. B. Any occupation. C. Partial disability. D. Presumptive disability. Answer A. Explanation. The own occupation definition allows the policyholder to receive benefits if they are unable to perform the duties of their specific occupation, even if they can work in another capacity. Other options are less favorable as they impose stricter or alternative conditions. Question 16. Topic. Elimination periods. How does choosing a longer elimination period affect the premium of a disability insurance policy? A. It increases the premium. B. It decreases the premium. C. It has no effect on the premium. D. It increases the premium for short-term policies but decreases it for long-term policies. Answer B. Explanation. A longer elimination period reduces the insurer's risk exposure, resulting in lower premiums. Question 17. Topic. Taxability of benefits. Under what circumstances are disability insurance benefits tax-free to the policyholder? A. When the policyholder pays premiums with pre-tax dollars. B. When the employer pays 50% of the premium. C. When the policyholder pays premiums with after-tax dollars. D. When the policyholder receives benefits for a partial disability only. Answer C. Explanation. If premiums are paid with after-tax dollars, benefits are received tax-free. Question 18. Scenario-based. Topic. Pre-existing conditions scenario. John purchases a disability policy with a 12-month exclusion period for pre-existing conditions. 6 months after purchasing the policy, John develops a disability related to a condition he was treated for prior to the policy start date. What will most likely happen? A. The claim will be denied due to the pre-existing condition exclusion. B. The claim will be accepted and paid in full. C. The claim will be partially paid after the exclusion period ends. D. The insurer will cancel John's policy. Answer A. Explanation. The exclusion period prevents coverage for disabilities related to pre-existing conditions for the first 12 months. Question 19. Topic. Residual disability benefits. What do residual disability benefits typically cover? A. The full benefit amount for any disability. B. A percentage of the benefit amount based on income loss due to partial disability. C. Medical expenses incurred during disability. D. Long-term care expenses. Answer B. Explanation. Residual disability benefits compensate for partial income loss due to a disability. Question 20. Topic. Premium waivers. What is the purpose of a waiver of premium provision in a disability policy? A. To allow policyholders to skip premium payments during the elimination period. B. To refund all premiums paid if the policyholder never files a claim. C. To relieve the policyholder from paying premiums while receiving disability benefits. D. To reduce premiums for policyholders with no pre-existing conditions. Answer C. Explanation. This provision allows the policyholder to retain coverage without paying premiums during their disability. Question 21. Topic. Mandatory policy provisions. Which of the following is a mandatory provision in disability insurance policies as required under North Carolina law? A. Grace period. B. Inflation protection. C. Future purchase option. D. Partial disability benefits. Answer A. Explanation. A grace period is a mandatory provision ensuring the policyholder has extra time to pay premiums before the policy lapses. Options B, C, and D are optional provisions that insurers may include but are not required by law. Question 22. Topic. Tax implications. If an employer pays 100% of the premiums for a group disability insurance policy, how are the benefits taxed when received by the employee? A. Benefits are tax-free. B. Benefits are partially taxable. C. Benefits are fully taxable. D. Taxation depends on the elimination period. Answer C. Explanation. When an employer pays the premiums and claims are approved, the benefits received by the employer are considered taxable income. Option applies only when premiums are paid with after-tax dollars. Question 23. Scenario-based. Topic. Claims process scenario. Lisa files a disability insurance claim after being diagnosed with a severe medical condition. Her insurer denies the claim, stating insufficient medical documentation. Lisa disagrees with the decision. What is Lisa's most appropriate next step? A. File a lawsuit against the insurer. B. Request a second opinion from a medical examiner. C. Submit additional documentation and formally appeal the decision. D. Report the insurer to the North Carolina Department of Insurance. Answer. C. Explanation. A formal appeal with additional documentation is the best course of action to resolve the claim denial. Filing a lawsuit or reporting to the NCDOI are steps to consider only after exhausting the insurer's internal appeal process. Question 24. Topic. Occupational classifications in disability insurance underwriting. Why do occupations with higher physical risks typically have higher premiums? A. High physical risk occupations require more frequent medical checkups. B. Policies for such occupations typically include residual disability benefits. C. There is a higher probability of claims due to workplace injuries or disabilities. D. Insurers offer fewer policy options to individuals in high-risk occupations. Answer. C. Explanation. Occupations with higher physical demands or risk exposure increase the likelihood of claims, which leads to higher premiums. Question 25. Topic. Benefit periods. How does selecting a shorter benefit period impact the cost of a disability insurance policy? A. Increases the premium significantly. B. It decreases the premium. C. It has no effect on the premium. D. It only affects the premium if combined with a long elimination period. Answer. B. Explanation. Shorter benefit periods reduce the insurer's financial liability, resulting in lower premiums. Question 26. Topic. Consumer protections under North Carolina law. What protection is provided to policyholders if an insurer decides to cancel a disability policy? A minimum of 30 days written notice is required before cancellation. B. Cancellation is prohibited under state law. C. The insurer must provide alternative coverage options before cancellation. D. The policyholder is entitled to a full refund of all premiums paid. Answer. A. Explanation. State law mandates advance notice to give policyholders time to seek alternative coverage. Option B is incorrect because policies can be cancelled under specific conditions. Question 27. Scenario-based. Topic. Renewability clauses scenario. Thomas holds a guaranteed renewable disability policy. After his 55th birthday, his insurer increases the premium. Thomas is confused and contacts his agent. What is the correct explanation? A. The insurer cannot increase premiums for any reason. B. Premiums can be increased, but only for the entire class of policyholders. C. The insurer can increase premiums based on Thomas's individual health status. D. Premium increases are only allowed during the policy's first 5 years. Answer. B. Explanation. Guaranteed renewable policies allow premium increases only for an entire class of policyholders, not individuals. Option. Applies to non-cancelable policies. Question 28. Topic. Coordination with workers' compensation. How does workers' compensation affect disability insurance benefits? A. Workers' compensation always fully replaces disability benefits. B. Disability insurance benefits are reduced by the amount received from workers' compensation. C. Workers' compensation has no effect on private disability benefits. D. Disability insurance benefits increase to match workers' compensation benefits. Answer. B. Explanation. Disability policies often include offset provisions that reduce benefits to account for workers' compensation payments. Question 29. Topic. Exclusions and limitations. Which of the following is most likely to be excluded from coverage under a disability insurance policy? A. Disabilities resulting from a chronic illness. B. Disabilities caused by workplace injuries. C. Disabilities caused by intentional self-inflicted injuries. D. Disabilities occurring after a benefit period ends. Answer. C. Explanation. Intentional self-inflicted injuries are standard exclusions to prevent moral hazard and fraud. Question 30. Topic. Group disability policies. What is one key advantage of group disability insurance policies over individual policies? A. Group policies are always non-cancelable. B. Premiums are typically lower due to risk pooling. C. Group policies offer higher benefit limits than individual policies. D. Group policies include automatic inflation protection. Answer: B. Explanation. Group policies benefit from risk pooling, making them more cost-effective for participants.